All right, everybody. We did promise that we were going to do a short video introducing, for those of us in the group, and we've been hearing all the semantics and the language of forex that we've been using, right? We've been hearing, oh, we made 250 pips, we made 400 pips, we made 1,000 pips, and all that, and you don't understand what all that means. The truth is that you really need some form of mentorship to be able to at least get a grasp of the basic terms in forex. Okay, now you know what our strategy, our business model is. If you don't have the time to really trade, you can pick any of our plans. But just to give you an idea of what we do in the forex market, when you see all these red and green things appearing, these are called candles. Okay, and this is a representation of the movement of these instruments, whether they are going up or whether they are going down. We'll tell you about that in details later on. So I'm sure you must have heard people peddling all sorts of materials, indicators, EAs, and they tell you it has a 80%, 90%, 100% win rate. Just buy my indicator and all your problems in forex is solved. You make a lot of money overnight. The truth is, all that, it's just bullshit, and it doesn't work. Okay, you just be wasting your money. And once you get hooked into that circle of buying indicators, you'll never stop. It doesn't just work. The only way, and the only proven way you can approach the market is by learning the traditional way that the successful guys have done it. And what's that? Understanding what is called price action. The movement of these candles, these things that you see, is repetitive in nature. Okay, if you understand what drives them, how they move, okay, your problem is like half solved. You can confidently, on your own, without the help of signal providers, who, by the way, are only interested in making money. They are not interested in your equity or your capital. They may tell you that at the start, but trust me, they are not interested. So what you need to do is to give time, effort, energy into learning, into practice. It doesn't look, there's no magic. The forex market is not a Ponzi scheme, it's not a pyramid scheme. It's a business, and just like any other business, if you don't commit time, effort, and energy to it, it will fail. Okay, the energy, the time, the effort, it's about learning, continuous and persistent learning. It has gotten us where we are today, and trust me, most successful traders will tell you that they put in a lot of time into learning. Okay, learning never ends. And when I mean learning, not only looking at the charts, there's a whole lot of thing that embodies this market that we operate in. Okay, so the truth is, take your attention off indicators. Those things never work. Okay, just follow the traditional way, look at the repetitive nature of price action, and that's it. You're good to go. All right, the simple truth, I call it simple truth, is that price moves in three ways, either of three ways. Okay, it's either it is going up. Okay, it's either price is going up. Okay, sorry about that. You have something like this. Let me take that off. It's either price is going up. Okay, you see that? Up, or it's coming down. My chart does not display the down when it's coming down, but you could see something like this area, or it's coming down. Now, when it's going up, it doesn't go in a straight line. The same thing when it's coming down, it doesn't come in a straight line. It moves in a zigzag pattern, like a zigzag pattern. That's how price moves. Okay, so when it's going up or coming down in a specific pattern, that's called ranging. That's called trending. But if it's just going in no exactly defined pattern, then it's called ranging or consolidation. Okay, so price moves in either of these three ways, and your success or catch as a trader is to be able to determine what is in your face? What are you seeing? What story is the price action that you're looking at telling you? If you're able to determine it, that's it. Your problem is half solved. But if you cannot truly tell what the price action is saying, what story is it a range bound market, or is it a trending market? If you're not able to define that, just leave that instrument and go somewhere else and look for something else. Okay, so there's no guesswork in the market. The market must be telling you a story. Either it's going up, coming down, or moving sideways. Okay, so that's what we look out for in the market. Your understanding of what the price action is doing is very key to your success as a trader. All right, so let me just give a simple illustration with the charts that I have in front of me. Okay, if price is going upwards, okay, it's going to be creating what we call higher high and higher lows. Let me just illustrate that here. So this is price going up. This is price going up. Sorry about that. I think my touchpad is messing up. So it's going to be creating things like this: higher highs. Okay, higher highs. Every time it's going up, all right, it creates a high that is higher than the previous previous high. Okay, now if you look at this areas, they are called swing highs, swing lows. These areas that I've marked out, let me just use a line to represent them, so you get a better picture. Okay, here, that area. Okay, and then you have this area here. You have this area here. Okay, all right, so you have this area here. You have this area, if you can see what I'm doing. Then you have this area here. Now these things, it may not always appear picture perfect, the way I have it here. It may not always appear like this, but the idea is that the principle is the same. The principle is the same. When it's going up or coming down, if it's a trending market, it will always create higher high, higher lows. Then if this is for a bullish market, if it's a bearish market, now we can just use this small area here to represent a bearish market. If it's coming down, it will be doing things like this. To be doing things like the same way I just marked out the chart. That's what you have. It will be doing things like that. So if I were to draw the lines, I'll be drawing the same horizontal lines like that. Okay, I'll be drawing it like that. So you see, that's what price will be doing. Okay, that's what price will be doing. Now, when if price is moving either this way for going up or that way, we now have something like this. You're having higher. Then you have higher high. Okay. Then here, it's a higher high. And then here, it's a higher high. Okay. So at the bottom, you have a lower high. I think I should use a lower high. Okay. Here, you have, a higher low. I'm sorry about that. That's a higher low. Just take that out. So you have forget about that. So you have a higher low. You have a higher low. Why do we use these terms? It's simple. That this is a high point, swing high, swing low, but you will find that this low is higher than the previous low that you have here. So that's why it's a higher low, and this is high. This is a low point as against this area, which is a high point. Okay, so this low point is higher than the previous low, and then this low higher than this previous low. So that's why you have them as higher highs and higher lows. Okay, now if it's coming down, let me just illustrate that with this area, this little area here, where it's coming down. Okay, where it's coming down. You see that? Like I said, it may not always be picture perfect, but still, this is how the movement of price follows. And you don't need an indicator. Yes, there are indicators that tells you these things, but in truth, you don't need it. Just look at the charts and understand the story. It's that's in your face, that is telling you. Okay, so in this case, but going by the same analogy we have here, you have a high. Now this is also a high, but this is lower than this one. So you now have lower high, and you have a lower high. Okay, then in this case, the reverse, you have a low, you have a lower low. You see that? You have another lower low, and then you have another lower low. So for a trader, what should come to mind is you should be able to determine that will not be in this video, that will be in a different video. You should be able to determine. Now if you look at this area, price is going up, determine how low this will come for you to take a trade. Okay, if you want to buy this pair, you shouldn't be buying here. The same principle that applies to our everyday transactions. If you want to buy an item, you don't want, obviously, no matter how no matter the quality of the item, you want to buy it at the cheapest possible price. Okay, so the same thing, you don't want to buy where the price is high. These are price points. You want to buy where the price is low. Okay, so you are buying low. All right, and if you want to sell, the same way, if you're selling an item, you want to sell it at the highest possible price to make the highest possible profit. Okay, so in this area where we are selling, you'll be looking to sell at the high point, not at the low point. You'll be looking to sell at these areas, the high, lower high, lower high. So a successful trader should be able to predict to a large extent where these swing lows are likely to occur. You should be able to predict where these lows, this higher low is likely to occur, so you can take a position and buy and ride the move upwards. Okay, and again, if you're selling, you should be able to predict where these lower highs will occur, and then you take it and move downwards. Okay, so that's where we're going to end this video for today. Maybe we'll do something, just a short video to let you know what you see in the chart. This is how it moves. Then if the market is just moving sideways, you know, if it's just going sideways, like going this way, some people still trade this. Okay, depending on the time frame or depending on your risk appetite or whatever. Some people still find a way, or depending on your strategy rather, some people still find a way to trade this sort of markets. Okay, so this is just a summary of what you see in the charts when we talk about higher highs, higher lows, lower lows, lower highs. Much later we will dive into more details to tell you why we how we are able to determine the areas that market will pull into, so that we can take, if we're going up, we need to find a nice area of a higher low to get into the market. Okay, then if we are selling, a nice area of a lower high to get into the market. Okay, so much later, it's just that's just what we'll do. When we post these when we post those profit, there's no magic. I don't think there's anything else. We're just able to analyze the market and, you know, see the story that the market is telling us, and then we just follow. That's what we do. We just follow. There's no magic. Somebody said wizard. No, we're not wizards. We've just been able to do this for long enough, and then, you know, it just jumps in your face. If it's not there, it's not there. If it's there, it's there. You just trade it. Okay, so in a different video we'll be able to tell you the certain things we look out for that enables us to take trades. All right, thank you very much. Hope this was a bit informative. Have a nice evening.